Hi, this is the part 4 of the global investing landscape series that I have come up with. In part 1, I have covered about general global investing landscape and opportunities for investors worldwide. How can they can play or invest in world markets through US stock exchanges. In part 2, I covered about current market assessment with respect to the US stock exchanges, particularly around the large cap NASDAQ large cap composite index, NASDAQ composite index, and the Russell's 2000 small cap index. In part 3, I covered about the Chinese market large cap index iShares, and where does that market stand as of today. In part 4, which is the last of the series with respect to the global investing opportunity landscape series that I have produced for your benefit, I'll be talking about the Indian market. Okay, now India has is in a sweet spot. As we have witnessed in the last few years. Also, it is not correcting or melting down or whatever you call it. As we see in say US markets at a stock level kind of thing. But there is a reason for it. First I'll summarize what happened in Indian market. During say since 2009, 2008, around the same period, so that you are comparing apples to apples. There are two main indices, through which you can gauge the Indian market, capital market attractiveness. One is a Nifty, which is Nifty 50, which is a large cap index, and which is a broader index. We had Nifty 50 lows around 2008 kind of thing, and Nifty 50 has hit a record high in December 2022, and in a way the bull run is still ongoing. Okay, that's one way of looking at it. As I said, we can't predict what's going to happen in future. But during this period of 2000 Nifty at a broader index level, 2000 I would say 2008 end, so we can take it as 2009 to 2022, roughly 13 odd years. Nifty 50 has recorded a gain of around 16.3% at the index level. Many stocks would have given, which are in the high growth phase or with strong earnings potential and all, they would have given far higher returns, provided you are right, you are there in the catchment area when the stocks were available at fair prices, so to say, the good stocks. So that's the at a summary level, that's what Indian market has done at a broader index level. But India market unique. Every market has certain uniqueness, in terms of what is driving the economic growth. Like in US, it's the technology which is driving the economic growth. It is weighted heavily in terms of the stock index level also, as we have seen in NASDAQ, which is more than 50%. In India, it is the banking and financial services sector which has a varying weight of 35 to 40% of the market cap. All these indices are weighted by market cap, free float market cap and stuff like that. So the banking sector is the backbone of Indian economy even today. Because we are in the growth phase, so there's a lot of credit expansion that's happening. That's the reason why the banking and financial service sector largely is fueling the growth alongside say IT and chemicals and pharma and whatnot. So that's the assessment or the broad landscape of opportunities with respect to Indian market. Now it has not corrected much since December 2002 highs. Nifty has corrected just about 10% kind of thing, because it's in a different phase in its whatever the cycles we talk about or the growth we are experiencing. Because in between, banking sector was stuck with a lot of NPAs. So there's not much of a market growth also. The index didn't move much between 2017 to 2019 kind of thing. But once this NPA problem is resolved to some extent, the banks have started performing well. So because they have a higher weightage in the market, in the overall index, the index started doing better. That is why the market is not correcting in a big way. That's one plausible reason we can give. Market has its own reasons as to why they go up or they correct. Now, there's a second important index that one should be aware of. That's the bank Nifty. As I mentioned, because banks have a higher weightage in the overall market cap in the Indian economy, as you see in the listed capital markets, Bank Nifty is also a very important index to track. Of course, you have small cap index and mid cap index and all. I'm not going there because of paucity of time, because I wanted to convey the essence of where we stand. Now, Bank Nifty during the same period, 2009 to December 22, has given about index level has recorded a CAGR growth, compounded annual growth of around 20%. Historically, I've done a lot of analysis because I'm from India. So, at 36 years, index returns are about 14 to 15% in India. Of course, the foreign investor would have the currency risk and some depreciation kind of thing. So even there at index level, it may not have given major gains to foreign investors, but India is considered as a stock picker's paradise because where do you make the money? You make the money the most in growth stocks, or if the economy is in a growth phase, you see more number of businesses and companies which are listed experiencing a abnormal growth, and then they get into steady state phase when they become large and blue chips, and so on a higher base you can't grow fast because they are mid-sized companies. It's a small and medium enterprises is still the backbone of Indian economy. You see a lot of companies experiencing growth, be it in chemicals or pharma. IT, of course, they are stabilized at a large cap level, but there are still some good mid cap companies. So that's the story of India. So Bank Nifty and Nifty are two major indices, and they stand. They continue to go up, till even as low as recent as December 22. Now it's very difficult to predict what's going to happen. But one thing my assessment I can say is, why is Indian market going up? That's very important to understand. So because Bank Nifty is not an expensive stage, how do you know whether the Nifty is expensive or Bank Nifty is expensive? One is the price earnings multiples at the index level. But if you see the majority of the stocks or businesses that constitute Bank Nifty are still in their teens and 20s. They're not expensive. 18 Ps and long-term average, and 20 if you are in 2022s, and so because they are still growing, it's the Bank Nifty which is supporting both the index, which is the Nifty 50 large cap index, as well as the Bank Nifty index. So that is the story of India, where largely this sector is supporting. How does it support? It supports the Nifty rise or Bank Nifty rise through earnings growth, because banks have started reporting higher earnings. Like I think yesterday HDFC Bank, which is considered as one of the best banks in Asia, has reported 20% growth in earnings. Now that's pretty decent, and they're not expensive. Growth alone is not important, but growth and with expensive valuation, the market will beat you down. So that is why the market in 2023, Indian market may continue to give decent returns. How much and all is very difficult to predict, but they are at a different stage vis-a-vis the US markets or vis-a-vis probably the Chinese market. But China market is at a different stage because it's in a very advanced stages of its correction, and it may not correct too much. But you never know. You have to look at the stock level. We can't predict so easily. But Indian market has the potential to grow further for this year. So so that throws up some investing opportunities. So the foreigners, the NRIs, the US investors and foreigners worldwide have an opportunity to play this Indian story through by investing into the stocks which are listed on US stock exchanges, through the ADR route, so to say. And all you have to know is which are those stocks and which is the basket of stocks which have still the growth potential, which are driving the Indian market. There are other markets also which are supporting, but dominant sector which is supporting the growth story of Indian capital markets, Indian economic story is a long way. We have a long runway of 25 years and all that I'll cover in separate video. Because we are gaining in stature, from 4 to 3 and 3 to 2 probably, and that's a different story. Suffice to say that where are your immediate opportunities in the global scenario? If you look at the landscape of investing opportunities worldwide, India, China, US and several others, so these three markets have covered. So that's the sum and substance of what I wanted to say. There are other sectors like oil and gas sector is also supporting. So to some extent, but their weightage is not very high. So there are few sectors. So the Indian story is happening in few sectors, not across the board. There are sectors which are expensive like FMCG. There are sectors, there are companies in sectors. Sector may be not expensive, but like NBFC, which is part of the BFSI sector. But some of the sectors which are stalwarts, some of the stocks which are stalwarts are expensive zone. So you should stay away from that. So there is a lot more, it's a very complex web. Stock markets are like a web. Some stocks will pull the index down, some stocks have corrected, so they keep pulling the index up. So the net effect is where the movement happens either up and down. So it's a constant swing either ways. So with these inputs, I wish you all the best in your investing journey. So that completes the 4-part series with respect to global investing. Thank you very much for hearing me out. If you like, my outlook or the assessment, follow me on YouTube and on LinkedIn so that you will get alerts whenever I come up with fresh thoughts or fresh assessment skills. Very soon, I'll also be available on some of the Indian platforms where Indians, NRIs, and in general the foreigners will have access to my research recommendations for global investing. Thank you very much. See you on the other side.